it kind of seems like we hit the bottom. So I think, there's only upside from here is what it seems like. The results weren't spectacular. Sales still fell 12%, but they're expected to fall mid-single digits in the first fiscal quarter, which was ahead of consensus. And it seems that things are working. The holiday order book is up. So, positive things going forward in still a choppy environment. We're not at positive sales. It's still going to take time, but I think we've hit the bottom.
Hey, Poonam, what is it though? We were breaking it down with you last night after the earnings broke, and the stock was kind of bouncing around, and so obviously some stuff got clarified on the call with analysts and investors. What is it in particular did they say or say over and over again that kind of gave investors hope in saying that, okay, yeah, maybe the worst is over?
Yeah, the first thing is on the inventories. And we spoke about yesterday, inventories were basically just flat, right? And you expected to see them down more. They talked a little bit about that, and they talked about how the order book is stronger heading into the holiday season. So that is why they're building up some of that inventory. They're continuing to clear out excess inventory of things like the Dunk, which they have too much of and they actually do want to get rid of. But then they're building inventory of new things, which are selling, which there is demand for. Store sales were positive. The holiday order book is positive. Those were really good indications as we move forward. And their guidance, of course, was better than expected. So I think all of that together just kind of sent the message that we're going up from here. Things are going to get better.
Poonam, what are they saying about the impact of tariffs either on their cost structure or on consumer demand?
Yeah, so tariffs definitely have an impact on their cost structure. We saw it in the margin guidance, which there's a 100 basis point hit from tariffs. It's $1 billion in additional cost. So there is definitely implications from that. They are able to offset a lot of it through price increases, internal efficiencies, supplier negotiations, but it's still going to hit the margin line. In terms of demand, it's not clear that it's actually pulled back any demand yet. And the way that Nike is strategically taking up these price increases, $5 on shoes that are over $100, no increase on kids, et cetera, I think their customer can absorb that without pushing back meaningfully, unless things deteriorate in the consumer macro world from here onward.
Poonam, I got to tell you, Paul's got a pretty snazzy pair of loafers on. I'm just going to say, I love the color. They're pretty cool. I don't know if he has snowfers yet from Nike, but I mean, these are not inexpensive. We talked about that last night too, and the resale of some of them going for like $500. I mean, this is a company that does continue to have the ability to innovate and really capture consumers and, really be a product in demand.
Yeah, you said it absolutely right. Nike just needs to innovate. It needs to bring performance product. It needs to bring style, more of it. It's not that they never did it. They did, but they just needed to continue to be at the cutting edge of it. And they're coming back to that. They're coming back to their roots. They're coming back to sports. They're coming back to innovation and being the brand that puts out the newness first. So I think this is one example of it. Clearly, it's not going to be, the shoe that's going to be made in, millions of quantity. So that's why you're seeing it on the resale platforms. But as long as they stay true to performance and sports, I think they will continue to do better.